So now we've done the budget for a sales mix between kefir and some of the kefir being converted into cheese. And now we're going to do the cost per unit for a case of kefir versus a case of cheese, and then do the two different kinds of income statements to see what we can learn so that we can start building some intelligence about this client to move towards making a recommendation in terms of the business. So, all right, materials for kefir and cheese are the same, but just for good practice, we'll go over here. 3 gallons of milk, and that's $3.50 a gallon. 0.4 hours at $14. Oh, we need to estimate the rate here. Okay, so the total overhead. And this is for the first 6 months. You could do a year if that's what you wanted to do. You could extend it out. Labor hours. Okay, so the rate is different because the number of labor hours in this particular budget includes cheese hours, which is more than kefir hours. So this rate is a little different because the overhead's a little different and the number of labor hours is a little different. Okay, so the overhead for kefir would be this rate times however many labor hours. Okay, so then we have a cost per unit for kefir, which differs a little bit because the amount of overhead spread to them differs. Okay, and so the materials are the same for cheese. The labor is not, because it takes more labor to make the cheese. And then the amount of overhead applied is based on the labor consumed. And so then we have the cost of kefir per case. All right, so now we're ready to do the income statement in the two different formats. So the sales, we already have a sales budget. We can just point to that. Cost of goods sold. All right, so now we're going to have to break the cost of kefir times the number of cases that we sell of kefir, the cost of cheese times the number of cases of cheese. So let's do that. All right, so kefir, we're selling that many cases times that sale plus cases of cheese times the cost of the cheese. And we are going to have to anchor down those cost cells because they don't float across. So the relative reference and the gross profit is sales minus cost of goods sold. And then the Amazon commission is still that percentage times sales. So we can put that in here, and of course, as usual, making that an absolute reference. Okay, variable administration is per case, and that's either kind of case. So let's see here, that plus that, so that's the total cases times what it is per case. And let's get those parentheses in there so we have the correct order of operations, which is probably 6th grade math, so it's probably been a little bit since you talked about order of operations, but you'll get different math if you multiply before you add than if you add first and then multiply. So that's how we want it. And then fixed is selling and administrative they give you. So then gross profit minus your operating costs get you down there. So let's copy over, see if we get any zeros, alerting us to the fact we didn't anchor something down. So that's what that looks like if you don't do it. Let's fix it and pull those over. Okay, so just a little reminder there of what it looks like if you forget. And so there we go there. Now, that profit looks quite a bit better, doesn't it? So that's interesting all by itself, isn't it? Okay, so now we're going to do it in the contribution margin format. The sales is the same under both formats. The materials is going to be the materials for kefir times the kefir cases, and the material for cheese times the cheese cases, but in this case the material is the same for all the cases, so we really don't need to. I guess we could just go ahead and use that total. I'd forgotten it was there. Make it a little easier. Let's anchor down that 10. All right. And then labor now is going to vary by the type of case that you're selling. So let's see here. Labor times the kefir cases that you sold plus this labor times the cheese cases that you sold. All right, and let's put our absolute references in so that when we copy over, it stays on the 560 and 980 and doesn't float over here into cells that aren't helpful. And for supplies and packing, it does vary depending on whether you're making kefir or cheese. So we're going to have to go and do those individually. So the packing for kefir's that, and then we have to add something different for those cases. All right, so make sure to get the absolute reference on the piece on the other tab, the input tab, where we're pointing to that cell. Okay. The variable overhead is based on the labor, which does differ. So we'll once again have to do that separately. So kefir is going to be 0.4 times the rate. And then we have to add the cheese cases times their labor times the variable overhead rate. Okay. And then variable administrative is the same for whichever cases, so I guess we can use just total sales. Okay, and then the commission times sales. All right, and let's suppress our relative references here. Of course, you know what it looks like if you fail to do that. It will certainly let you know. And the total variable cost. And then sales minus total variable cost gives you a contribution margin. All right, let's see if I got all the relative references locked down. Okay, that looks like it worked. All right. So now fixed overhead. Fixed selling and administrative. Absolute reference those. Operating income being contribution margin minus total fixed. All right, let's see if I got the locking down all correct. We're going to have some volume variances. So that's a difference between the profits. Not very big, but there are some differences. And just as a reminder, these are because under the contribution margin format, we're putting all of the manufacturing overhead in here. Whereas in the gross margin format, some of the fixed overhead is assigned to the unsold cases. And so we haven't really talked very much about variable and absorption income yet. That's coming. So this is just an advanced teaser. It is not something to bring to your client's attention, but some of you are smart enough to go, wait a minute, why don't these two equal? And so I'm just letting you know why they don't equal. Why does it zero out here? And that is because cumulatively, the number of cases sold and the number of cases produced is the same. There's no inventory at the end of the 6 months, so that ends up flushing out off the balance sheet. And that may be more than you can absorb right now, but for some of you, this is what you need to make it all fit in your head. The rest of you, we will be getting to this in chapter 9, I think. I'm not sure. Soon. That's coming. And probably your client doesn't need to see both of these, so the explanation as to why they don't exactly match is not something of particular interest to your client. Okay, so then the next thing we're going to do is work on the break even and the target profit. And so you're already seeing some ideas about what profit looks like if you produce just kefir. So you're probably already having some ideas that some portion of production ought to be diverted to cheese. And what are the pros and cons of that? And what ratio should you recommend? Right now it's at 13%. You could change it to 15% and then go back and inspect and see how things change and so forth, or knock it down to 10. And there may be a point at which you go from not making money to making money. And that might be an interesting crossover point, that you have to convert at least X% into cheese in order to reach either target profit or break even. So you can play with that a little bit. So in the next one, we'll be doing the break even and target profit.